Ever wondered how much of your investment returns actually end up in your pocket? We pour our hard-earned money into platforms like StashAway, hoping for growth, but what about the costs? Specifically, what are those management fees we keep hearing about? Let's be real, no one likes hidden charges, and understanding what you're paying for is crucial before you commit your savings. Picture this: you've diligently built your portfolio. It's growing, the numbers are looking good, and you're feeling pretty confident. But then, you see a deduction, a little slice taken off the top. That's where management fees come into play. They're the cost of having professionals manage your investments, but how much is too much? And what exactly are you getting for it? StashAway, like many robo-advisors, operates on a fee structure. It's not a one-size-fits-all situation, though. The amount you pay depends primarily on your total assets under management, or AUM. Think of it as a tiered system. The more you invest, the lower the percentage you'll typically pay. Now, let's break down the specifics. StashAway's fee structure is designed to be transparent, but understanding the nuances is key. They charge a percentage-based fee, and this percentage varies depending on your investment amount. For smaller portfolios, you might see a higher percentage, while larger portfolios benefit from lower rates. This is a common practice in the investment world. But why these fees? What do they cover? StashAway's management fees essentially pay for the platform's services. This includes the automated portfolio management, rebalancing, and optimization that their algorithms provide. They also cover the cost of the technology that powers the platform, as well as the expertise of their investment team. When considering these fees, it's important to weigh them against the potential returns. A slightly higher fee might be justified if the platform consistently delivers strong performance. Conversely, a low fee might not be worth it if the returns are lackluster. You need to look at the net return, which is what you keep after all fees are deducted. Another crucial aspect is the transparency of the fee structure. StashAway aims to be upfront about its charges, providing clear information on its website and within the app. However, it's still your responsibility to read the fine print and understand how the fees are calculated. Don't be afraid to ask questions. If something isn't clear, reach out to their customer support. It's also worth noting that StashAway doesn't charge for things like deposits, withdrawals, or account opening. This can be a significant advantage compared to traditional investment platforms that often have a laundry list of hidden fees. Ultimately, the key takeaway is that understanding StashAway's management fees is essential for making informed investment decisions. Consider your investment goals, your risk tolerance, and the potential returns before deciding if the fees are worth it for you. Don't just look at the percentage, look at the overall value you're getting. Think of it as paying for a service, and ask yourself if that service justifies the cost. With that said, thanks for watching, and until next time.